The views and opinions of this program are those of the host, guests, and callers. There is substantial risk of loss in trading futures and options, which you should carefully consider prior to trading.
For over 95 years, we've set the bar. Power, we restored it. Protection, we reinvented it. Record yields, we redefined it. If there's one thing we know at FS, it's that just because something hasn't been done, doesn't mean it can't be done. We're never satisfied unless we take your farming operation to the next level. Run your equipment at peak efficiency and bust the bins this season. Visit fssystem.com.
Well, when the dust settled on Monday's trade action, we did finish well off of the session highs, specifically in the bean market and in corn as well. Corn kind of got dragged lower by pressure in all three classes of wheat. And we have a lot to take a look at with a hot, dry forecast ahead of us here this week. We have crop tours and social media pictures that are influencing the market, and a lot to take in. We're going to talk about all of that and more here today on the program. Joining us, John Heinberg with Total Farm Marketing. John, good to catch up with you again. Hope you had an awesome weekend. And as I alluded to, there's no shortage of topics in this market trade here this week. And kicking things off, we started really strong, but it just faded throughout the day with beans and bean meal really the only grain market with some green on the screen.
Yeah, obviously a disappointing day from the momentum standpoint in the trade. And, we opened up strong last night for both corn and beans, obviously just probably factoring in the weather to that point. Maybe some of the retail advisor, the side money just thought, here it comes, high temperatures, boom, market rallies. And, unfortunately, probably the calendar and the development of the crop outweighed that a little bit as the day went on today. So pretty disappointing. Corn market, big reversal to the downside. Watching, we put the gap in, closed the gap, kept falling, took out Friday's low. That price action to me opens up the door for another push to the downside here. Soybeans at least still held some positive gains, but obviously the bottom half of the trading range today. So we'll have to see how that plays out. And then we still got the wheat market, which just struggled all day to get with the influences, the global supply situation. That didn't help the corn market out at all as well. So really, in my mind, it was kind of a disappointing day, especially for prices of corn, considering where we started out to where we finished here this afternoon.
Yeah, and I think about it, there's a lot in front of us here. Obviously, the hot, dry weather is a big factor. Could definitely take the top end off of soybeans. Corn maybe impacts some of that ear length. Corn, for the most part, is, really advanced at this point. Still could have an impact, though, but it seems like that's what traders have on their mind. But you couple that with the algo computers and some of the pictures they're getting off social media from the Midwest Crop Tour, and I know that led to some of our pullback in the grains on the day. So it's kind of an interesting balancing act here this week in the grain markets, John.
Yeah, and that part you just mentioned there, again, the computer side of the trade. And that's, I think, a big factor here. This market wants to think there's a lower yield out there. And I think a lot of people, in terms of, the producers and things of that nature, think there's a lower yield out there. And USDA obviously is not totally in agreement, obviously, at this point. We still don't know. I do think, like you said, in this world of algo traders, they set their programs. They're looking for numbers to come through. And, and Pro Farmer, again, is just getting started. No official numbers out there. But when you're seeing good numbers in South Dakota and Ohio, where they got rolling today, and even down into some areas of Nebraska where things seem to be doing fairly well, the market kind of responded like, hey, maybe that 170, yield or the 175 yield on that corn crop is out there. And that just keeps the supply side full. It just kind of felt like that today as those numbers started kind of rolling in and the pictures kept moving across the social media lines. Is that going to be anywhere near what the final numbers are? Probably not. But perception sometimes in the marketplace is more than reality. And maybe today we just got a little bit of a perception. Areas like Ohio were dealing with major weather issues early. And it looked like most of that crop seemed to pull through in certain spots, at least with a average to, an average yield that maybe the market was anticipating.
Well, thinking about corn and beans here, I'm sure you could speak to both, but December corn, November beans, I feel like some of these levels here, another opportunity to try and protect some of that downside risk in both, maybe leave the top side open potentially here if you want to get a little bit of sales done. I know sometimes it's hard to make a sale if you don't know quite exactly what you have out there, but hopefully at this juncture, you at least have some sort of idea how your crop is looking, and you can maybe make a few forward sales to protect some downside, John.
Yeah, I think definitely in the soybean market. I know I mentioned that to a few guys today. It's like, hey, you probably had a chance to throw a $13 sale with the basis out there. We'll see, depending on the region. Might have been a great window, especially for those at-risk bushels, those bushels you don't have storage for that you need to move in the fall. Probably was a window to do that there. I was a buyer of corn puts most of the day today. We had a nice little rally last week to get to this point. Just a chance to beef up some positions by adding an extra put or so in here or there cheaply with some shorter term time, just saying, if this thing goes back to the lows, what do we got to work for us? So I was a little bit more cautious, obviously, in that mindset. Again, just looking at everything we're seeing in terms of the marketplace outside of just the pro farmer tour and the weather. You had a wheat market today struggling to hold on to the $6 handle in September. You got a big Russian crop getting harvested. You got a lot of exports going there. Chatter of insurance companies opening up the insurance routes for that Ukrainian corn or following the safe port path, the path out. Again, so talk that those bushels are moving. And that all just kind of came together today, and it just really made it a very hard day for corn and wheat to find any traction. And unfortunately, we look at the export side still for corn. Export inspections today, a couple weeks left in the market year, just a little bit short of what we still need. Does that add to the pile when we already got the largest grain stocks in 3 years built up here on the old crop supply?
Well, John, as well, you mentioned that wheat market with that cheap Russian wheat out there. And I know that something that keeps I keep watching is what's going on with that Russian wheat, and really just the world supply in general is fairly plentiful. So, I mean, even you get wheat down to some of these support levels, some maybe spring wheat challenges in the northern plains and Canadian prairies, but at the end of the day, I mean, these wheat prices were just still not competitive with some of our world counterparts like Russia, John.
Very much so, and you saw the strong move of the dollar index in last week too.
Yeah.
That only hurts things more. You got the movement in the ruble on the global scale, which only cheapens up, makes things more available. And then on top of that, talking currencies, look what's happened to the Chinese yuan. It's devalued immensely against the dollar here in the last couple of weeks because of their economic situation and the money they're sticking into their economy. Well, that just weakens their buying power, and that's the group we need to see step in. And I know we talk about corn demand. We've seen a little bit of movement on the soybean side, which is good. Corn demand's still well behind, at least in terms of Chinese purchases. Mexico stepped in today again and picked up some more corn, which is not going to move the needle in this marketplace because we expect that to occur. It's just those Chinese bushels. You look at last week's export sales numbers on the report, they were absent unless they were under the unknown tag. But China still continues to be absent from this corn market. And I think until we find a price point that maybe they step in, this market stays on the defensive, and then you rally like this week, last week into today's, turns into selling opportunities.
Also, John, I know the outside markets, the stocks, energies, so we're watching those. With the stock market, we got the Jackson Hole Symposium this week, and that's always a talking point as well. I know fairly quiet stocks on Monday, but I have to imagine a lot of folks in the trade are going to be watching and listening for what rhetoric comes out of that meeting here this week, John.
Yeah, very much so. Again, what's the commentary more than the actions, and see what the plan is going forward. We just got a little bit of shakiness, last week in terms of the equity markets. You got that chatter of moving some of the bond, credit ratings around, bank credit ratings around. That sent the market down towards the end of the week. Obviously the Chinese economic situation. Obviously, if the world's largest buyer is not healthy, the global marketplace isn't healthy. So those are some things that are outlying, but definitely negative factors that need to keep in place. And when it comes down to money flow, and we haven't talked about that, the funds are short corn. They push that position very aggressively the last 2 weeks. Okay, they're still short wheat, they're still long beans, but that position's getting a little bit smaller. Right now the money flow wants to stay on the negative side. And again, that opportunity like we've had this last few days for them to push those positions again today, at the first off the expense of the producer and the retail investor, definitely showed up as they built that long position again on this type of a move.
Crude oil fairly quiet as well. I know we're still hovering around that $80 a barrel mark. Anything you're watching with the crude trade?
Again, it's a supply demand situation. Supply side is extremely tight, but the market is very concerned about that Chinese demand being the world's largest user of oil. Plus is that Russian oil getting through the system, which it sounds like it is. And again, it just kind of keeps this market on the defensive. But we're going to hold this 80 handle. The chart definitely has improved over the last week or so. But that's still an area that we need to watch. Again, producers, keep an eye on your fuel costs. There's an opportunity that could be coming there, may have already been in front of us here to get some fuel costs caught because of that. The way the chart's looking, prices could go higher.
We are having a conversation today with John Heinberg from Total Farm Marketing. John, let's look at livestock, cattle first. Cattle on feed report from last Friday. I'll call it neutral to friendly, especially I know that placements number. You were talking with me about that. That looked pretty good. Live and feeder trade was moderately higher on the day Monday to kick off the week. What's your take on the cattle on feed numbers and the overall tone in the cattle trade right now?
Let's get right into that placement number, down 8% year over year, below expectations. We've had two reports in a row where the placement number was a surprise to the upside, whether we're bringing cattle across the border to fill the lots. The lots had plenty of room. I think it was a combination of the weather, feed costs, get those cattle into the lots quickly, and now we just kind of ran out of cattle. Again, the cow numbers aren't there, the calf crop numbers aren't there. Now we're at a spot where maybe the cattle that needed to be placed are in. And to me, that's reflective of where we could be, looking at those spring months. I know I've talked about that April 200 target a couple times. You go look at the numbers that are in these feedlots that the demand can hold in there, which it still is at this point. That could be something we watch here. We go put that 2 number in front of April cattle. We're only $8.50 away or $8-9 away. Doesn't take much in this market. I like the turn on the charts Friday after a bit of a correction. Got some follow through today after the report. So kind of feeling again, we'll see. Retail values holding in 300 plus. Cash trade was a little softer last week, but if we can get that cash trade to fire up on tighter supplies, again, this market's still got some more room. I am still a cattle bull, but still a cautious cattle bull at this time frame.
Well, and I think too, seasonally, especially in live cattle, this is a time where those seasonal start to turn late August into September. But, the way this cattle market has been acting, I'm going to say, John, it's not really a typical year. Maybe it's an atypical type of year here in this cattle market where, anything goes almost. It remains to be seen, I think.
Yeah, we're getting through the Labor Day demand window now. Now we'll see where we go into the fall. But, we start talking about the rib trade for Christmas and things of that nature and the holiday season, which is not that far away when we're talking the 1st of September. It could be interesting to see how this market plays out. The rib is the driver of the retail price. We'll see how that kind of plays again. If there's good demand there, that'll give this cattle market a boost. That's where the packer makes their money, is on the rib trade, not so much just the regular beef side of it. So keep an eye on that going forward. Where do we start seeing some demand here? Again, the supplies are still tight. That isn't going anywhere. That's not going anywhere for a while. There's no incentive right now for producers to crank any cattle into the operations when you got feeder prices where they are. You got grain prices still relatively high, even though they're not where they could be. It's still just very difficult for guys to say, all right, let's bring some more cows back on board here. And this is not going away for a while.
Hog market turned a bit lower on Monday. Overall, though, I feel like this hog market has had a pretty good run the last couple of sessions. So felt like it was maybe due for a slight correction, John.
Yeah, I agree with that. Obviously, we still got a big discount to the index and the cash market. And with that, October is the lead month. We saw some profit taking after the August contract disappeared. Now we get a little bit of a rebound in it. So maybe we're just getting our sideways type pattern here, with the $80 mark kind of being our center point. So we'll see. Again, still going to come down to what happens to those outside factors in terms of the cash market and that retail trade. Do we keep some support there? If that does, the October contract's undervalued. But if hog numbers start picking up again, which I think the market's anticipating here, then we'll probably hold and see if that cash market and those retail values start to slide.
John, how about the dairy trade? Any notes you're seeing there? I believe we got a milk production report coming out here today or this week, right?
Yeah, nice move today. And, I was kind of thinking this market was feeling like a little heavy. We've seen a lot of strength in the butter market. Strong move again today, another 4 cents higher. Last week, one day, we went through 49 loads of butter, which was actually what we believe the largest day on record for cash butter trade. It tells me there's somebody buying some export demand in that regard. So we had a nice little breakout today, back to the new highs, pushing that $19 handle again on September milk. So we got to watch that. Again, some of that's probably tied to maybe some breakout because of the weather in California affecting the dairies there with the flooding and the heavy rains, those concerns. So we got that immediate production concern. I think we got to watch. As the last time we had that type of move, we had a pop and we sold that right off. So here comes an opportunity maybe for producers to catch a little break here if they feel a little tight on the budget. So be cautious. We'll see what that numbers give us today. I'm assuming production to stay relatively heavy. And still trending that way. Watch those cow numbers. We've been seeing some cows disappear, but production's holding in there pretty well as we keep those better quality animals in the herd.
John, before we let you go, final thoughts, anything you want to reiterate for folks here today?
The grain markets, especially corn and wheat, they are on the defensive. That's where the money wants to go. That's where the global position wants to go. The demand shows that. Again, take advantage of rallies as opportunity to make sales. Or at least get some defense built in here until something's proven otherwise. Let's not forget, though, we still got an insurance guarantee at $591 out there from February price. Probably somewhere in here that we may want to narrow that gap up. We'll see. I keep liking some of those December calls here if the market gets low enough again to have some cheap insurance over top of this as we go into harvest.
John, if folks want to reach out to you, get some advice there at Total Farm Marketing, what is the best way to get a hold of you?
Sure, love chat with them anytime. Give me a call, 800-334-9779. Shoot me an email, jonh@totalfarmmarketing.com. And again, don't forget that website of ours, totalfarmmarketing.com.
John Heinberg with Total Farm Marketing. Always great to talk with you, my friend. Have an awesome week, and we'll talk to you next week.
Sounds good. Have a great week.
That's going to do it for the show today. Find us online, markettalkag.com. I'm Jesse Allen. Have a great afternoon.